evening. Just a quick roundup of where I think we are. I always like starting at the Dixie and the VIX whenever I'm deciding on day trading possibilities and whether they're strong or they're a day that maybe I'm not going to look for a play because there's not one that's obvious unless later in the day I can see a big setup coming in. So here we're looking at the Dixie over this recent period since the election, and we can see that we've jumped at the Dixie has risen after the election, and then the liquidity has loosened up, and we can see the looser liquidity here. Then we've seen some sideways action until we've started to see a build, and quite a violent build we saw in December, and we can probably see it more in the VIX than we saw it in the dollar. But since then it looks like it's sort of played out to a flat period. So if I go back to the 2 hourly, we will just see that we've got a trending sideways market at the moment. This is pretty flat, and really it's just hanging around sideways. We've been flat now since about the 7th of January. It's going up and around this 1750, 18. We've got a high volume node in there, and there's no huge actions one way or the other. We did have some smaller day reactions that were good to trade. The 10th of January was a great day for both the VIX and the Dixie. The Dixie was the one that told us that there was a lot of action coming in, and this can be seen in this strong. We had this strong build here. We've gone to a sideways motion. This is reactions going both ways. The liquidity just rolls around until it gets some position, and here we can see after quite a long time the reaction to loose liquidity is less, and then we get a very strong build after a loose reaction, and then we get some quite good price discovery coming into Friday and into the weekend before an open on Monday where it was up quite high. If we just go and have a quick look at the VIX next. So the VIX, the VIX has been having a wild time. So if we have a look at the VIX over a period of time, let's just zoom it out and have a look. The VIX has had quite a strong build after the 24th of Jan. We had some loose. We can see from about the January, from Friday the 10th of January going through, it has slowly built and loosened, and it has slowly pulled back, and then finally, on about the Thursday the 23rd, it is after the Nvidia finding out that maybe some chips had got into China and got DeepSeek going. We had this reaction where the liquidity has just tightened and tightened until it's burst out on the Monday, and we've had quite high liquidity, and it stayed quite tight. It has washed out a little bit in the centre there, but it has been ongoing, and we've now seen it bouncing around Fridays. We've seen since then we've had quite a build to loosen, and then we're back into a tightening market, and this has been classical tightening after the below the 50 mark or below the zero line in liquidity. So that's it looks like we're coming into a tighter period. If we just went and had a look what's happening in the options, we can see here that we've had this nice build in December before this is DPI I'm looking at here, dark pool interest, before we had a blow off into the middle of December, third week of December, and then we've had a couple of little builds of DPI, and we've seen the price rising, and then we get these days when it tops, when we see topping liquidity, topping DPI, and we can see that each of these correlates to a top. We haven't seen a topping from Friday, so volatility is going to remain quite high. Are we going to head south? Both the VIX and this looks like we're going to head south at the moment in the DPI. If we just quickly have a look at the VIX, it's the options. We've gone from having very reduced puts on Thursday to quite a large increase in puts. We have had quite a large increase too in calls in the higher deltas, but these are the lower delta puts which like being sold. So there's a little bit of a mixed signal in here. I'm expecting a little bit of a flat until we get another catalyst, flat to up, which doesn't bode well for the open on Monday. If we then just move on quickly, we'll have a look at where these things would lead us. We'll just take one more look. We'll just look at the... I've opened the wrong thing. Just make sure that I've got the right one on. Yep. I like the SVX, the ProShares short VIX, short term. So this is looking at the near term VIX, and it's the inverse of them. And I find it a very good guide to what the market is doing. So we can see that we've had some reactionary bouncing around over the last month. We've got a big tight market here that has very quickly shortened later in January after some tweeting over the weekend. Again, it has stayed relatively loose for the whole period, and that's why we've had this reaction of just, even though we're getting bounces around, it's slowly loosening. And again here we had a bit of a build during the week, and then on the Thursday it started to tighten up, and we knew as this the irregular liquidity started to rise. The irregular liquidity is trying to iron out the days of the week and average it over a period of time. So let's just have a look at the 30 minutes. I like the 30 minutes as a great way to trade the day. We can see here that we've gone from we've come from being quite flat through Thursday to just starting to rise into the Friday start of the Friday market, and then as it's risen, it's loosened up, and we've had a exaggerated reflection here in the prices last weekend, and then opened on Monday, and it's a little bit indecisive at the start, but this was very good to trade in the ES. We could see it with much finer detail. The SVXY has just opened later into the market, and so it hasn't seen as much of the reactionary liquidity. And then it's just slowly tightened during the week until Thursday at the open, and then it really just we start to see it rising again. And yes, a lot of this is coincidental, but liquidity is a lot of the time coincidental, so it happens at about the same time as the market. You can see it in the market, but there are certain indicators like the SVXY that will keep you in a trade, and we can see quite clearly here that we've got rising liquidity, and we've come out of being set in quite a channel here. We've come out of this channel, and we can see here that we're starting to get into a trouble zone. And then as Thursday and Friday's gone, it has stayed in a loose illiquid state. A loose liquidity state, and we've seen both the indexes and SVXY pull back. All right, the best day trading, and I think it nearly needs to be followed in any of your trading. You have to check back. So any particular ticker that you want to trade. Let me just change this to weeks. We need to average it over a period of time to get our center lines right. So this is the ES on a weekly. I always think it's good to just zoom in at the start of every day when you're going to start trading and see where we're at. We've been in a very sideways movement here. Liquidity has started to tighten again. That being said, it could just be one of these reactive periods. It's been going pretty sideways for a while. Remember, we're looking at weeklies here, so we are getting close to a decision whether this is going to break out of this trading range, or it is going to stay in it for a while. I tend to think that we're just about to break out. If we look at it over the period of 2024, there was a couple of nice sort of points, and the end of 23, there was a couple of nice points that really stood out in liquidity and wasn't particularly obvious if you were trading it. One of them was back here in the end of 2023. We'd had a couple of flat periods, but we'd had a real tightening in liquidity. It became quite illiquid, and that has sent us into this period before we start getting up into this danger zone, and we can start to see it getting red here in April, end of March, start of April, and then it's just slowly bounced down into a new state of being quite tight, and then it's come up, and as soon as we started to hit this red zone again, we're up above that line. We know that we're in trouble, and there we go. We can see it's in trouble. Quite reactive. We've come out of August quite well. That was the JCB and the carry trade break off, and the amount of hedging gave us that very reactive. We can see that this liquidity has just slowly dissipated out into the market and tightened until we've got to the top, and we're now in this period here where we're very loose. All of the tightening and the price discovery has finished. We were very loose for that top period, and it's just trying to charge up again. We can see it charging, but we don't really see that in the irregular liquidity. We haven't seen a huge charge. It's quite undecided which way the market's going to go at the moment, and I suppose that this is just the period now we've had January the 20th inauguration, when people are trying to decide where the markets are going to go, what's going to happen with monetary policy, and I don't think anyone knows. There's no one who's really out there saying what's going to happen. We can't even decide whether we're going to be in an inflationary market because of the lack of, or the extra inflation that might be caused by tariffs. Just go back down to days, and so here again we can see we've come out of this period here over a weekend, and we can just see this coming into the weekend in the middle of December, and we can just see it racing into an illiquid period. And we can just slowly zoom down so we know where we are in the market, rather than just starting on one day and trying to work out where we are from a day. It's always good to get the OI, the option open interest, every day, so we have a much better idea. Changes don't tend to happen in one day; they happen over a couple of days. But the VIX always helps us and gives us general direction, apart from on days when it's orange. So here we've dropped in. Apart from we've had this little rise into Friday, which has given us this pullback. But we were starting to tighten before that. And if we get down into the 30 minutes, again we can see this period here, and then we can see it tightening, and that tightening was going to be seen again. I'm just using the yellow line. We can see that it's quite loose here again. It stayed above it stayed looser than the 50% line here. So we are expecting from this sideways, after travelling loose for a day and a half, we're going to get a reaction. So into Friday we've had a reaction, and that reaction really had to do with the data point. And the data point, it's interesting, we didn't see the actual reaction to the price until after the open, or at the open, but we can see that there's a sharp movement around that time of the decision coming out, and then we've just slowly jumped up in the 5-minute period. We should have the data point wasn't a good data point. We already knew that the VIX options, the puts, had been closed, so we are expecting higher. And if we just had a quick look, we can see the VIX here this is on the Thursday end of day. They're both charging again, and we've got an increased DPI. The SVXY isn't a great fortune teller for the day's trading. It is very good in liquidity on the TradingView charts, but in OI it's a very softly traded. I just have it in there always to remind me to watch it. But we can see that, we've got a little bit of greenish here in big tech, a little bit in the Qs, and we did see that during the day. But we also saw things going. We saw the SPY and the SPXL going to amber. So and down in the TNA and the IWN, we're even starting to see a bit of reddish, but definitely it's not green for go ahead. It is be very cautious. So then in the 5 minute we get this lovely reaction, and then we've stayed in a loose high liquidity state. We've stayed loose until we've had this reaction at the bottom of the day. Sorry, in the middle. The middle of the trading day, and then after lunch we've seen it rise up again into a loose position, and then you could have just tried. This is just reactionary. We've had this very loose positioning, and then it's bounced down, and then basically gone sideways to finish out the day. Very easy scalping day, very easy to follow. Yes, you did have to make a decision that we can see this rise up here at the time of the data point. We did have to realise that then there was going to be a bad open, and that bad open we could see that it was already there in the VIX, and we knew that it was definitely there in the Russell. The Russell isn't. The other indexes are never quite as clear. They are reflections of what we expect to see in the S&P, but here we can see that the Russell went down earlier in the day, and the reflection wasn't as large, so it's been a lot more sideways from about lunchtime, and there was nothing to trade in it whatsoever. And the main part of that reaction had come from this quite strong build here through Thursday and Friday closed hours. So this is the Globex Asian and European hours, and it was really quite negative coming into the open on Friday, and here's the open, and really it has then just followed the S&P. Now I'm sorry if it is a little bit of a draw on my Sunday update, but I hope that you can see some benefit and where you can use the liquidity for your day-to-day trading. Thank you very much, and have a great week's trading.